In this video, traders, we're going to look at picking a currency pair that suits your trading style. Stay tuned. Hey guys, warm welcome to you. If you're a subscriber, I appreciate your support. If you're not, maybe this video kind of resonates with you and you think this is the sort of thing that you want to see more of. Anyway, okay, I was flicking through the currency pairs and I was sourcing them on TradingView by price change. And I was looking at some stocks, I was looking at some currency pairs, and I was kind of thinking a lot of the questions from newer traders, and it's kind of the question that I remember I was having as a beginning trader, is that you kind of wonder what you should trade, right? You say, okay, I don't know what to trade. And I've done videos where I've looked on the whiteboard and we've talked about how you can kind of get down and nail this out. But I thought, okay, there are a lot of currency traders out there. How do you pick what you should trade? I know a lot of currency traders are trading the majors. You know, they're trading Euro US dollar, they're trading GBP USD, USD JPY. And I get it, I understand why. The spreads are tight, those are the ones that are most commonly reported, those are the ones that there's most analysis on and people feel like they have some sort of angle on it. But often these bigger currency pairs are the more challenging to trade. Now that, you know, obviously that's subjective depending on your style, and that's when I thought, okay, that's actually is subjective depending on your style. If you're the kind of trader who likes this environment of two-way trade, not much volatility, a little burst of volatility and calm, then the euro suits you well. But if you're struggling to make money on Euro US dollar, rather than just sacking it in and saying, you know what, I don't want to trade currencies, I'm going to trade something else and go straight to a kind of cannabis stocks which is going crazy, why not stick with FX but trade something that's a little bit of a different chart? So example, GBP JPY. If you look at this and you see how many same color candles you have in one direction, just in this short period of time I've got here. Now I've scrolled back and I've looked at this, and this is the same throughout, and we'll look at this in a second. But you know, bear with me the simplicity of this. The point is, if we just look at this window of time here from when I'm filming this video, there are several instances where we have more than 4 days of trade in one direction. In other words, you know, 4 green days before a red, 4 red days before a green, etc. If you look at Euro US dollar, if I can find it on the screen here, there are many instances where we've had that. Yes, there are it's going to be a couple, but the point is that the range and the movement you get in those is far damper, it's far less than in something like GBP JPY. Now, is this a new revelation of volatility? No, GBP JPY has always been known as a volatile currency pair. However, the point is that you look at the chart and you say, you know what, my strategy is to jump onto momentum. And so I'm not best suited, this is kind of you talking to yourself hypothetically, you're perhaps best not suited trading US dollar, which very rarely exhibits strong momentum. However, pound yen does exhibit strong momentum, and the kind of this video obviously came about because I'm watching the momentum coming up to this key resistance level here as I'm doing this this video, and it'll be interesting to see, do we break through, do we flag, hold below, etc. This is not a video about price action, this is a video about selecting the best instrument for your trade. However, if you like the two-way trade, in other words, you kind of like to scalp pushes to highs, you're very much mean reversion, this may not suit you because you're getting multiple days in one direction before you're even getting a pullback, and if you're trading mean reversion, you're going to get smashed. And of course there are times where it's going to work, the markets do run in cycles, but if you look at the overriding theme generally of the currency pair you're trading, you can start to align yourself with the kind of style that you trade. You know, for example, if we look at USD CAD, you know, USD CAD very much is, to me, is a mixture between the two. You've got this very two-way trade. You tend to get wider trend lines like you do in the US dollar, wider trend lines that have the rotations back and forth. You don't tend to get these very significant breaks that run on and on like you do with GBP JPY. There are other examples of this as well, guys, like we can look at Euro Swiss. You know, Euro Swiss, relatively calm, and obviously some catalyst comes out, you're going to get a move, but relatively calmly traded unless there is an external catalyst. Euro GBP, the same, very much two-way trade, not much going on, two big economies kind of ploughing out against each other. Not to say that pound and JPY isn't, but just the characteristics are different. So anyway, the point of the video, guys, is to listen. If you're trading Euro US dollar and it's not working, and you think, okay, I still want to stick with currencies, I don't want to shift over to equities, I don't want to shift over to futures, then perhaps focusing your effort on something that's a completely different flavour. Now, I've just got GBP, JPY up here because, like I said, I was analysing it, thought what a great time to do a video. But for you, the recommendation is to get all the currency pairs out. You can go to Finviz and do this as well as TradingView, whatever, and start to look through at a daily chart, at a monthly chart, at a 15-minute chart, whatever time frame, to see that works for you in all those time frames preferably, and sort of see which charts appeal to you and which charts obviously would work with the trading style that you have. Now, it might be euros dollar fits perfectly, it might not be, but it's just a kind of exercise to do. If you're not getting the results you want, perhaps it's not always your strategy, it's not always your mindset. It may be sometimes is the vehicle that you're trading. You're trying to trade a strategy that suits you, but in a vehicle that's not quite right. So don't flick from one to the other and kind of dart around, but it might be prudent to do a bit of research and say, you know what, maybe I need to allocate some capital to that, or maybe I need to trade that on a demo, maybe I need to kind of bring that into my sphere of trading to see if it's something that is working very well for me. You might find that you absolutely nail every kind of move and ebb and flow with it, and it becomes your go-to pair to trading rather, and it might be some obscure one as well. Watch out for the spreads though on those, rather than the kind of go-to ones that everyone goes to or everyone trades. Alright guys, whatever you're doing, keep the risk managed. Take care. Bye bye.